Bitcoin dropped below 30,000 US dollars.
Crypto obviously right now getting crushed.
Digital currencies have now lost $2 trillion in value.
Is crypto facing an existential threat? We all know things could get worse for the crypto market, but just how much worse? Could all crypto lose all of its value? I mean, sure, crypto's big, ever expanding, made up of numerous coins, mining companies, exchanges, but is it big enough? Is crypto too big to fail? There are over 20,000 different tokens, and according to coinopsy.com, at least 2,400 of those are already dead. But it wasn't the death of those coins that caused the last two major crashes. Crypto's healthy enough where the extinction of a few smaller coins has no real impact on the industry as a whole. So the issue at hand when it comes to the concept of too big to fail is really the big daddy of them all, Bitcoin. The industry and media tend to use the price of Bitcoin as an indicator of the health and viability of the whole crypto market. Bitcoin could survive the death of thousands of other coins, but how many coins could survive the death of Bitcoin? If Bitcoin goes down, like all the way down, it would take the whole industry with it, which means that within the world of crypto, Bitcoin is too big to fail. But you're a subscriber. You're a subscriber, right? So you already knew that. The bigger question, what would happen to the global economy if Bitcoin and therefore crypto dropped to essentially zero? Even if you're into altcoins, heck, even if you're into stocks and you hate crypto, you still need to know, is Bitcoin too big to fail? Now real quick, I need to tell you about my membership group, Finova. There you get access to additional videos, investment advice, trade signals like this, and live coaching calls every single day, the type of content that you can't get anywhere else. It's like OnlyFans, but for my brain, not my body, although technically my brain is in my body, so you get 7 days free if you sign up, which is more than I can say for most OnlyFans accounts. Not that I'd know, I was born a Pornhub man and I'll die a Pornhub man. Too big to fail is this snappy phrase the Obama administration used to justify the 2008 bailouts. The logic was, sure, we could let these mega banks and automakers collapse, but they'd probably pull down other industries with them. And that just might lead to the ruin of pretty much everything else. We'll never know if they actually made the right choice or not, but what would happen if there was some kind of Bitcoin extinction event? If Bitcoin fell to essentially nothing, would that ruin everything else? According to NASDAQ.com, 300 million people in the world own crypto. That's basically the population of the US, minus Florida. The value currently floats around $1 trillion, and Bitcoin tends to make up about 1/3 of the total crypto market cap. If Bitcoin were to somehow fall to zero, this would absolutely destroy faith in the industry, and this wouldn't likely happen in a vacuum. It could easily lead to some amount of selling of more traditional assets like real estate and stocks, but there's no way to put a number on that, nor predict how quickly that could happen, but it wouldn't be great. And it's not just about the coins themselves or the owners of those coins. The bailout of the auto industry in America wasn't senators worried, what if there's no more PT Cruisers? It was more like, what if all these people who make PT Cruisers were to lose their jobs? And it doesn't stop there. What about the people at body shops, dealerships, or car washes? According to Forbes, there are nearly 600 cryptocurrency exchanges worldwide. Zeroing out their most traded product would make those exchanges more or less useless, which would undoubtedly lead to the loss of thousands of jobs. And then there's mining companies. If Bitcoin were to become worthless, almost 1 million miners would be forced to find another revenue stream. And maybe you're thinking, well, sure, Bitcoin crapping out would be bad for the crypto industry, but for the rest of the world? I mean, maybe you're thinking Bitcoin didn't even exist until 15 years ago. Maybe you're thinking Beyonce already had put out 3 solo albums before the first Bitcoin was ever even created. So how bad could it be for the global economy if some project that was nothing not that long ago became nothing again? How bad could that possibly be? Those are fair questions. But the thing is, Bitcoin may be new, but so is Tesla. And the crypto industry as a whole is worth about $100 billion more than Tesla. And it's not far off from Amazon either. So while a crypto meltdown wouldn't destroy the world economy the way a banking meltdown could, losing a chunk of the economy that's between the size of a Tesla and an Amazon would certainly bring down more than just the general vibes. And it would definitely have at least some impact on just about everything. It sounds pretty bleak. But before we determine if the government would step in and save a crypto collapse, we need to dive into the fascinating way a currency collapses. But first, Webull. They're the app I use to buy dividend stocks, but they do so much more. Like, let's say you wanted 50 shares of CryoLife, and 20 shares of Sensata Technologies, and 1,000 shares of Alliance Mining Corp, plus 1 Ethereum coin. Well, for just north of $3,000, you could be the proud owner of some crystal. Hey, it worked for Walter White, right? I don't know how to transition out of this. So, Webull, they're not a sponsor, but if you use the link below, you'll get up to 12 free stocks for joining, and I'll get like 20 bucks. So do what you will with that information. Now, would we be able to see a crypto collapse coming? Kind of. Bitcoin is a currency, and the stability of any currency depends on consumer confidence, the political state, and economic performance. When a currency bottoms out, like the Hungarian pengo did in 1945, or more recently the Venezuelan bolivar, it usually happens after a period of hyperinflation. We're talking about inflation rates of not 10, not 20, but 50% over a period of, wait for it, 1 month. 50% inflation per month. How do things get that out of control? Simply put, economy bad, government print money. Bank lend money, economy still bad. Business raise price. People pay price. Price inflated. Economy still bad. Repeat this cycle enough times and inflation can grow fast enough that it reaches the dreaded status of hyperinflation. If the value of the currency isn't tied to any commodity like gold, then there's no natural constraints to its value. This is called a fiat currency. The value of a fiat currency is determined by the government that prints it. In a fiat system, governments can literally make as much money as they can dream of, and this can go on and on and on. How many ons, you ask? Well, the worst hyperinflation ever occurred in Zimbabwe in 2008, when the monthly inflation rate reached 78 billion %. They actually had to print a $1 trillion bill. Hold on a second. What does this have to do with Bitcoin? Well, take a seat. You're sitting, brace yourself. Big breath. When it comes to Bitcoin, hyperinflation is impossible. The biggest threat currencies face literally cannot happen to Bitcoin. This is wonderful, absolutely wonderful. Now, just to be clear, technically the value of Bitcoin can fall to essentially zero, but the whole idea behind cryptocurrency is to overcome the failure of traditional currencies. I'm sure you've heard the story that Bitcoin came about as a result of the 2008 housing bubble, that the bailouts were the radioactive spider bite that created your friendly neighborhood spider crypto. But crypto's story goes back much further than that. And I think it's fair to say that the failure of dozens of currencies in the last century are sort of the death of Uncle Ben. Parker from Spider-Man. If you don't know what I'm talking about, there are like 20 movies. You know what, let's just move on. The point is that crypto is designed to solve the currency failure problem. Governments don't print Bitcoin. Banks don't print Bitcoin. And unlike any national fiat currency, there are only so many Bitcoins that can even exist. Even though it's called a currency, but you might say Bitcoin is less like a dollar and more like gold. It's extremely unlikely that some evil force could ever take over Bitcoin. And since Bitcoin and virtually all other cryptocurrencies aren't tied to any one government or economy, they can't really be compromised by overprinting, military coups, food shortages, or natural disasters. The biggest threat to Bitcoin is if people stop caring about Bitcoin, stop caring enough to hold it, to use it, stop pushing for the right for financial privacy. Again, it's possible for Bitcoin to fall to near zero, but the odds are extremely slender. It would take measures literally never before seen to even try. We're talking about like world governments and corporations working together to overregulate and outright ban Bitcoin on a global scale. Again, technically possible, but even then, making Bitcoin illegal wouldn't necessarily make it worthless. Twice this year, the White House has suggested heavy regulation and even a total ban on Bitcoin. And both times, Bitcoin prices actually went up. What does that tell you? Heavy regulation, especially by the US, really just legitimizes Bitcoin. Banning it might actually make Bitcoin more valuable than ever as a black market currency. So in the end, it's not really that Bitcoin is too big to fail, it's that Bitcoin is too Bitcoin to fail. It's literally built to not fail. But let's go back to the original question. If it were to fail, let's say there was some huge hack on the network or something happened where the whole market collapsed, is crypto big enough to where governments step in and save it? I don't want this to be the answer, but I believe no. Governments wouldn't save investors in this kind of collapse. Just take a look at history. In 2008, the massive 150-year-old financial services firm Lehman Brothers collapsed and filed for bankruptcy. This tanked global markets and meant at least 25,000 people lost their jobs. Guess what? No bailout. No bailout, even though the week before this collapse, the government had taken over the mortgage guarantee companies Fannie Mae and Freddie Mac. Even worse, the same week Lehman collapsed, another finance company, AIG, got bailed out. So why did Lehman get left in the dust? Two reasons. First, it was determined that Lehman did this to themselves. Second, interconnectedness. It was determined that AIG was so interconnected that it could have hurt the entire global economy should it fail. So the question, is crypto too big to fail, really comes down to two things. Is it interconnected enough? And does the government care enough to keep it alive? The first question, while I do believe a total crypto collapse would hurt other markets just due to its sheer size, a crypto collapse doesn't mean the world collapses. At this stage, crypto's still in its infancy. Business-wise, it doesn't do a whole lot of interacting with the real world yet. Eventually, sure, but just not yet. So do governments care enough to keep the prices up and keep this thing alive should it collapse? Well, governments do use Bitcoin and other cryptos to track criminals. It's way more transparent than cash. But they could still do that whether it's priced at $50K or $5. And even though they use crypto, it doesn't really mean they like it. Governments can't control crypto like they can just about everything else. Crypto collapsing or people losing interest at this point just kind of means one less thing for the government to worry about. So we have good news and bad news. Bad, the government is unlikely to save crypto should something dramatic ever happen, at least at this point. But the good is crypto, especially Bitcoin, was literally designed not to fail, eliminating the risk of traditional currencies. You know, when I started this project, I really wanted to find reasons why crypto would be protected, why it was too big to fail. I wanted to feel like there was some kind of safety net here. And I came out of this reminded that crypto was built to not need external safety nets. And that's a good thing.